Today we'll be pitching to you ASML. I'm Taylor,
And I'm Aryan.
and today we'll be pitching to you the relatively unknown company, but at the burgeoning at the start of a great industry, which is relatively unknown, but has great potential and value.
To start off with the company overview, ASML has a large market share, hence they're ranked first in the Future Brand Index, as they're the only firm manufacturing extreme UV lithography equipment. And they have a large market share in both the DUV market and the photolithographic market, with over 85% share in DUV immersion and 62% share in the photolithographic machines. Hence, it has a large economic moat, as it has an industry monopoly in all the three different industries it runs in. Some of the main suppliers, however, do include TSMC, Intel, and Samsung Electronics, which help further this economic moat.
When we look at the corporate governance, we see that there's a high amount of emphasis on financial positioning, but also another 40% comes from technology leadership, and the second being market position, both meaning that the company heavily prioritizes staying on top and staying as the number one company in the specific respect. 4 of 5 members of the board of management have been at the company for more than 10 years and are all experts and veterans in the specific industry. The major shareholders include Capital Research and Management Company, BlackRock, and many other investors represented by Vanguard.
To further develop our investment thesis, we can look at the growth factors and catalysts, one of the main ones being ASML's essential role in alleviating the chip shortage. Since it's a natural monopoly in both the DUV and EUV immersion markets, ASML has a key role in the supply chain of semiconductors. Hence, due to the chip shortage, and the global pandemic, there is a rise in the consumer demand, with the expected sales to increase to around $30 billion. Moreover, because the industry is becoming more capital intensive for the consumers, ASML's technology is more demanded, hence there's more consumer demand. And we can see this through the capital intensity ratio in the 2020 projections being at 22%, which is a rise from the 17% in 2020.
We need to look at ASML as a key player in the semiconductor manufacturing to further understand the value. ASML is essential for semiconductor production firms to meet the goal of reducing chip size. This means that to follow this sort of idea that all firms try to strive for Moore's law, a linear type of increase in the amount of performance, ASML is essential. The high switching costs mean that ASML is virtually one of the few sellers, and continued investment in innovation of DUV metrology and inspection technology, which will power the shrink of the EUV LED. They are key for the rapidly growing markets of the modern era: 5G networks, artificial intelligence, high performance computing. And they've also got big companies such as TSMC, Intel, have stakes in ASML.
Furthermore, ASML has a unique research and development process, which further separates it from its competitors. Since the semiconductor manufacturing industry is growing at a rapid pace, ASML has to adapt and innovate to do the same. So hence, they develop their product catalog at the same pace as the consumers, whilst working with their consumers, such as Intel and TSMC, to understand what they need so that ASML can produce it. Hence, they work in parallel and not sequentially to diversify their portfolio, to dive into different realms of the technology and provide their consumers with a diversified portfolio. They also have a large emphasis on the research and development, with over 121 partner agencies, thus making ASML dynamically efficient.
Looking at the financial analysis and valuation, we can see that ASML is clearly a healthy company in terms of its income statement. It is the largest company by market cap amongst competitors and has the highest gross margin, with Applied Materials being second. ASML only sold 31 EUV machines last year and sold 100 in their whole lifetime. This means that ASML can keep its expenses low because they don't sell these products in bulk. There's also high retention amongst their customers. Being large semiconductor manufacturers, they're a B2B company with high value customers. And being these
And
the largest semiconductor companies, they are very much, in some sense, they need, the semiconductor companies need them more and they need the semiconductors individually.
And looking at a holistic overview of the company through the lens of the Porter's five forces, which is a qualitative analysis of the firm, the bargaining power of suppliers is expected to increase due to the chip shortage and the global pandemic. However, due to strong relations with ASML suppliers, ASML does not see this as a significant threat. In terms of new competitors entering the market, ASML has a large economic moat through low cost advantage, a large distribution network, and branding. Thus, some of the new competitors do not have the same financial power or strength to compete with ASML. In terms of substitutes, ASML is the market leader in EUV and DUV technology, with only photolithography being a market which they're in, which may have a threat of substitutes, as Nikon and Canon both have a slight market share. In terms of the bargaining power of buyers, since ASML is a monopoly, it is considered a price maker. Hence, the consumers such as TSMC, Samsung, and Intel may not have large bargaining power with ASML, since it's some of the sole producer in EUV and DUV technology.
Lastly, looking at investment risks, we see that the supply chain may have issued due to COVID. There's intense competition, at least in photolithography, with Nikon and Canon. New competitors may enter certain markets and industries, and there's a rise in trade tensions. Supply chain shortage due to freight rates increasing, we believe, is a short-term issue and is genuinely an issue felt across the whole market. We see this not as an issue that is fundamentally is a fundamental issue to the company in the long run, and we don't see this as factoring into its true value. We say that the intense competition with Canon and Nikon has seemed to have slowed down, with Nikon only having nearly passing them again, but not doing so, and they've been second place to ASML since 2006. New competitors are far less of an issue because there are very highly valued competitors currently in the market, which have not even made any significant progress towards ASML. And this just shows that new competitors will need a lot more valuation, they need a lot more expertise, which they can't finally find. And lastly, the trade tensions, we don't see this as a long-term issue. We see this as a more short-term because they'll be able to reevaluate their market presence in certain industries rather than looking at further.
And finally, because of the ESG considerations, ASML focuses on various key areas in line with the UN SDGs, such as climate and energy, circular economy, people, and so much more. If we specifically dive into the three different areas of the ESG, we can look at environmental, where ASML is aiming to maintain a net zero waste disposal to landfill by 2030 and net zero value chain emissions by 2040. To do this, they have reused, recycled, and upcycled various parts worth of over 1.2 billion euros. In terms of energy and renewable energy specifically, ASML has a 92% usage of renewable energy globally, with Netherlands and the US being 100%. For social factors, ASML has an attrition rate of 5.4% compared to the global 22 average of 11.6%. Additionally, they have nearly a 40% female workforce population in the supervisory board and an employee workforce representing 122 nationalities, thus suggesting that ASML has a dedication towards making their workforce more diversified but equal, and so that they can work in harmony and have a good company culture. For the governmental aspects, there is a new realigned ESG strategy which was announced in 2021, which targets long-term sustainability until 2025. And this furthermore shows that ASML is dedicated and and committed towards making progress towards a sustainable supply chain. Hence, we pitched to you ASML with a price estimate and target of $844 and an upside of 26.5%. Thank you.